Before we get started, how many of you are engineers, architects, payment specialists who work on Mojo, work on national payment systems? Please raise your hands. Engineers, technical techies. There's more than that out there, but these are your clients, and they're going to talk about their challenges. If you aren't building things for them, you're not doing your job. So please pay attention. Please ask questions. I've got a few questions for them, but then we'll open it up. So start thinking about the things you'd like to hear from them. But incredibly excited to be here. So I want to give them a chance to introduce themselves and their organization. So we'll start with Morgan, if you can kick us off.
Thank you, and good morning, everyone. So I'm Morgan Chichala. I'm the ICT manager at the Zambia Electronic Clearinghouse. I've been in payment systems since 2008. And I played a critical role in the implementation of the National Financial Switch, a switch that I also come to see come to life. And this is why discussions like this are of key importance and excitement to me. So thank you.
Thank you. Morgan, George, please.
Thank you. My name is George Murage. I lead technology and operations for Integrated Payment Services Limited as the Chief Technology and Operations Officer. We operate a service that provides real-time payments in Kenya. We're better known by our brand name, PesaLink, and we've been doing this now for 6 years. I'm glad to be here.
Thank you, George. Leonard, please.
All right, thank you. I'm Leonard Chilomo from the National Switch, Malawi. I'm the operations manager, and I've been with the National Switch since its inception from 2014. Currently, the Switch is offering interoperability services on several use cases like instant funds transfer, account to account, integration to mobile money operators, bank to wallet, wallet to bank, POS, ATM, as well as integration to the microfinance institutions. And also in the pipeline, we have the e-payment gateway that is being implemented. So it's quite an exciting journey. Thank you.
Aimable.
Thank you, Steve. Good morning, everyone. My name is Aimable Rukundo. I'm the Chief Digital Officer at our Switch. Our switch is a Rwanda switch where we do same. We provide instant payment as well. Recently launched wallet to bank to bank interoperability, and we are also in card system. We are switching card both international and local scheme. Thank you.
Thanks, everybody. I want to start with one question. I mean, I just passed on the line. We'll start with Aimable coming back the other direction. All of you have various levels of switching instant payments between, especially between different types of financial institutions. Either it's already live, it's in build, or it's scaled, or it's in concept. And all of you have been dealing with the challenges, risks, costs of operating other types of payment systems. And so I want to dig into what are the particular challenges when it comes to challenge, or let's focus on the cost and the risks that are new and additional when you start doing 24/7 instant payments, especially across different types of financial institutions, whether it's the wallets and banks and microfinance, SACCOs, housing associations. So Aimable, if you can kick us off, what are the challenges you faced so far? And as you scale, what do you think the challenges or the costs and operational costs that you're going to be facing going forward are?
Thank you, Steve. And I think it's not only our switch. The instant payment, the interoperability initiative came in when there was a bilateral arrangement between different players, MNOs, direct integration with banks, bank to bank. So those initiatives had already in place for quite long. So the initiative of having a central switch to offer that service was a challenge to take off that service that already in operation for quite long. Another challenge is primarily the cost of infrastructure and the cost of resources, technical people who understand both technology and both payment systems. In the past, it wasn't going together. Either you are fully tech, like me in the past, or you are fully a banker where you understand banking systems. And we are required to know both. We are required to understand tech side, and you are in combination with payment systems. So primarily getting someone who could map those together was quite a huge challenge. Although we are getting support on trainings, getting more people joining both wings. Now people are trying to understand the essence of central switch and the essence of cutting off the bilateral arrangement. And also, we are here to implement the inclusion whereby we need to cut costs. Those challenges of heavy and challenging and expensive infrastructure doesn't go hand in hand of affording payment systems. So somehow, some of the switches have been receiving government subsidies, but we are pushing to get where we need. Another challenge, and I think this is mostly in Africa, the education challenge. Digital payment in the past was not trusted. Like, why I send money and it doesn't get to you. And when you bring instant, you don't have a reversal, which is direct. If the money doesn't get to Steve, then I won't get money directly. Imagine if it's the only money that I have. It's a challenge if I don't have a direct reversal to me, so that I try another channel. Recently, I was asking people, why do you go with card while you also have a mobile payment, while you also have cash in hand? In Africa, we always respond, just in case, because if one channel doesn't work, already in mind, you already have in mind that the mobile channel might not work, the card channel might not work, and I go with 3 options, even 4. So the education challenge and the trust of the payment systems have been a challenge to us. And linking to there, it minimizes the use of systems. So those are the main challenges I foresee with instant payment systems.
I really like that last one of like, a lot of people carry 2 systems. If there's no instant payment system, I just carry my card and my cash. But now you're saying, okay, there's an IPS, so I should actually carry 3. Yeah, we have to make sure that it is as trustworthy as possible. And people have a problem once, maybe twice, and then they're never going to use your system again. You've lost not just that customer, but all of their family members and everybody else who they tell that they lost money on, or they had a moment of fear. So that's an incredibly important one. Thank you. Leonard, the same question. What are the costs and risks that you guys are facing, especially as you roll that across different types of financial institutions for your IPS system?
All right. So for the national switch in Malawi, one of the major challenges has been the cost. In terms of the instant EFT service that was recently implemented, especially commercial banks, they already had a cost structure, which was on the higher side. It would cost about maybe $1, in some cases $2. But with the coming in of the instant EFT, and we have this multi-stakeholder environment, the central bank had to come in and sanitize the pricing. And it was actually a challenge because most of these commercial banks had already done their budgets. So for them to actually restructure that costing, it was quite a challenge. There have been those discussions back and forth. Eventually, we are making progress. And the second one is with instant EFT service, you would at times, of course, it's frequent now, you have cases whereby customers send funds to a wrong account, and then they would want that money to be reversed. It's something that even though some institutions have put disclaimers on their platforms to say, in case you send to a wrong account, the institution is not liable, but still as human beings, we are prone to error. So being a customer-centric solution, we are still engaging stakeholders to implement a lookup service, which would involve a client of another bank being able to actually query another institution to confirm if this account number is really existing and it's the correct beneficiary. But however, there are some institutions which have reservations towards opening up their systems to be able to verify these details before the client sends out the money. So these are discussions that are ongoing, and we hope to make progress as there are other operational issues that have to be considered. But yeah, progress is good. Thank you.
Okay. And I think there's probably a few people in the room who would love to talk to you about that problem. The lookup service is something that a lot of people are working on. So that's great for bringing that up. All right, George, if I can turn it over to you. Same question. As you guys are running instant payment systems, and primarily for banks, I believe, at this point. But what are some of your major costs and risks that you guys are facing?
Okay, so for us, so we run as an independent company. We do not have a mandate from the regulator to do what we do. So that means the people who come to us don't have to connect to us. So we have to behave like a product-led organization. We have to build creative products. We have to arrive at the correct price point. I think one of the challenges I see is how to, widen the umbrella of inclusivity to get not just the large banks, but getting people who put their money in mobile wallets, to get people who put money in circles using our services, and being able to give it to them at a price point that they can afford. So I think that's one of the challenges we see. Then another one that I think my colleague, my fellow panelist pointed out to, is just the amount of money you need to build this. So this is it's a new game. You want to build modern infrastructure. You want it to be cloud native. You want it to be fast. You want it to be agnostic to a lot of vendor lock-in. And I think it's a little analogous to the situation I had when I arrived here in Lusaka, and there's this beautiful airport. And I just realized that, oh my God, the government of Zambia is facing the same challenge I'm facing, that you build this wonderful technology, hoping that the traffic comes, but who funds it between when you build it and when the traffic comes? Because there is always going to be that gap. It's never instantaneous. And the nature of building things is that you never can do it partially. Yeah, you have to sort of like put some stick in the ground and build it. So as I was admiring this great airport in Lusaka, I was like, oh my God, I never thought about it this way, that yes, you need to build this great technology, but there is this gap that we are trying to solve for, which is a funding and investment gap between when you build a great product and great technology to when you get the traffic that enables you to be able to pay for these great products and technology.
That's an excellent one. I mean, it is something that you were talking about national infrastructure. You have to be ready for, like, I talked about in my opening of billions of transactions.
Yeah.
However, if it's difficult to pay for the billion transaction infrastructure for one transaction.
Yes.
And for a lot of you who have boards who are looking at you saying, how are we going to pay for this? It can be very, very scary and frustrating. So thank you for bringing that one up. Morgan, same question, especially as you guys are, we talked about yesterday, you guys are transacting between different types of financial institutions already, and then looking for scale. What are your main operational risks and costs that you're facing right now?
Thank you. I think I'll pick it up from George's last point. You know, when we are setting up these systems in Africa, we usually don't have a starting base where we have our own technology to deploy. So we have to go outside and look for solutions that are already working. That is because, one, you want to get it right when you start. Two, you want to make sure you're going with a product that is already tested. And three, you just want to ensure that when you get started, you don't stop. Now that comes at a cost because, one, your CapEx is high. As you're going through the project, you begin to appreciate that the resources that need to go in are also high, because sometimes the technologies that support these solutions, I'm talking about IBM platforms, Oracle databases, and so on, are also high. So as you're coming to a point of getting the system fully implemented, you then look at, like for instance, in our case, the clearinghouse was started by commercial banks. So when we started the project and the journey, we were mostly looking at the needs of the commercial banks. But the project took about 10 years to go live. And within that 10 years, the needs kind of shifted because the MNOs, the non-bank financial institutions also needed to be catered for. So at this point, you started with one direction, and then you have to come in and include other players on the market. So that being said, you find that issues of change request become also an issue, because now you have to also cater for the other partners that are on board. And the MNOs also had very high volumes of customers. So the customer base that was introduced was beneficial to everybody, but we needed to also cater for that. So that cost is high. I'm talking about support as well. You have to firstly go outside for support. And such costs are not easy to come by. And there are certain times you don't really have a full picture to the end of what your cost bearing will be. But because you're on a journey and it's beginning to show you certain result, the successes that you're scoring push you to want to do a little bit more. But because you're only beginning, it starts at a cost. And when you are now settled and stabilized and you're running the system, other issues come in on the operational side. Where we're going to get the monies for the resources, I think Aimable talked about it. We need specific resources. Within your implementation, you consider the issue of cybersecurity as being key. Now, cybersecurity, addressing those issues on cybersecurity are not cheap as well. You go for certifications such as the PCI DSS. And to get the PCI DSS certification, there's a lot of hardware, software, people, and processes that need to drastically change, and that comes at a cost. Now, when you're running all these solutions and you are a public good, meaning a non-profit making, to strike that balance between service delivery and operating at cost becomes one of the biggest things that you have to handle. And within that change as well, like I indicated, if you're considering the cybersecurity from your end, you'd want to see how you extend this discussion to other parties. For instance, here in Zambia, where you look at the need for maybe hardware security modules for the card-based transactions, that is something that is used, they use those costs anyway. But when you bring in non-bank financial institutions or smaller fintechs and aggregators, and you tell them to say you need to invest in this type of system and this type of hardware, they look at the cost and they're like, okay, maybe I will not join now. Or if I will join, I will not speak of my immediate issues because I will be asked to resolve them at a cost I cannot bear right now. So the access to funding for these fintechs also kind of slows down what you want to achieve. But at the end of the day, we seem to find a place where we strike some harmony. And this comes in sometimes through regulation. So as opposed to what George was mentioning, Bank of Zambia gave a directive for us to say, as long as you're acquiring a domestic transaction, and it's issued within the country, that transaction needs to go through the national switch. So that in itself is volume, and it also brings in sanity as to how quickly can we have this volume to help us recoup on the investment. So basically, I think in our case, it's the issues to do with how we don't stop talking about cybersecurity. This is a big one. And then seeing how we can leverage more on our local people, improving on the training, ensuring we're upscaling on our skills, just so that we can begin to let go of these, I'll call them foreign technologies, because we bought them from the outside, and see how we begin to build our own, support our own, manage our own. I think for the first question, that's what it is.
I think I could be done with this question, with this panel after that. So I hope everyone was taking notes. I know a lot of my friends I've been working with for years. That was an amazing 10 minutes. So thank you all for that. I think there's a couple points I do want to highlight. First of all, Aimable, I forgot to mention one thing. You're right. That is an incredible, unique skill set. And I would just like to apologize to you and to the rest of Rwanda for taking Manzi to the Moju Foundation. We hope that as one of the few people who has both those skill sets, he still is providing you with support. So, and then you brought up something just now of this challenge of the different financial institutions. Like a lot of your systems, like all of your systems, originally came out about, actually with one exception, you guys are, Leonard, you're quite different. Most hubs around the world were built for what banks needed 10 years ago or 5 years ago or 20 years ago. And the governance structure was created around that. Not all of you, but most hubs around the world are owned by banks. And you brought up a great point. Yeah, well, it's not just banks anymore. And Leonard, you brought up a great point as well. I mean, it's not just the technologies that you were talking about, that a lot of hubs are used to the kinds of technologies that banks are used to happen to have, but SACCOs don't have the security in place and the resources to do that. But also you mentioned the business model, Leonard, which is, so I'd like to dig into that because you guys are different. You guys have an ownership structure, which is across microfinance and MNOs and banks. How do you cater for the different business model and operational model? I've worked for a telco, never a bank. I can tell you the banks I tried to work with, they just worked differently than we do. You guys have to speak different language, different business, different operations to different types of institutions. How do you manage that? How do you manage dealing with different types of institutions and their different business models?
Okay, so we have several forums where all stakeholders have to sit and discuss. One of them is what we call the NatSwitch Management Body. It's an operations committee of the NatSwitch board, which comprises all these stakeholders. So we have the MFI hubs, they're represented there. We have the mobile money operators as well as the banks. So all other issues that are affecting the ecosystem, they are discussed there in a transparent manner, and solutions are forged. And just to add on to that, these different players, the national switch, there are different specifications that they have to comply to and integrate into the switch. So the way they transfer the transactional messages, it would vary, but then the switch at the middle would be able to format these messages and forward them to the intended recipient. So it's quite, I can say, it seems a complex setup, but it does work because of this continuous and transparent consultation process that goes on. Thank you.
Thank you. I think that transaction flow, I think there's a few people who hopefully we'll open up to questions a little bit later. So I think there's a few people who worry about transaction flows that's incredibly important for. This is not the forum, but we're going to be talking about ISO 2022, I think tomorrow or on Thursday. And that will be a very interesting conversation about how 2022 relates to non-banks like microfinance and mobile money. Okay, so for those of you who don't have shareholders who are microfinance and MNOs, how do you deal with serving customers who are not owners? How do you manage the governance of serving customers who are not owners of your switch. So actually, let's start with Aimable, if you can get started.
Thank you, Steve. For us, because we are still under implementation, we are still affording to support them. And what we did first and foremost, we set up the standard. Everyone need to communicate with standard communication messaging, which is 222, ISO 222. And we made sure that the API integration is clear. And we, for the small microfinances, we are actually investing to support them to integrate. So one of the challenge is some of MNOs are complaining that fintech are taking their businesses. And for us, we think that is the only way. If you bring competition, then you lower the cost of transaction, and then you are toward the inclusion. So it's a challenge. Some of the big players will resist to use the service, but small players, we are supporting them to afford the cost of integration. But we set up the standard report, standard settlement, and also whoever doesn't, we also offer the trainings to the small players on the market. Thank you.
Okay, and we're very much looking forward to being a part of that training. So thank you very much. George, simple question. I know you guys are not looking forward to doing that, but what do you anticipate being some of the challenges of working with different types of players, including the MNOs, for your switch?
Yeah, so for us, we work hard at trying to create a level playing ground for everybody. So we don't have a different tariff for a bank, even though we are owned by banks, and another tariff for microfinance. It's all the same, and it depends on what use case that you're having. And then the other thing we've noticed in our market is that a lot of the tech work is done by certain aggregators. And if you talk to these aggregators, it's very easy for them to understand what it takes to integrate into our platform. And then they're able to do it for another 5 or 10 people. And it's something that's repeatable. So I think we've seen a lot of progress in terms of attracting non-banks onto our platform. We've also listened to them a lot because their economic models are different. So for a bank, and maybe to some extent, a microfinance bank, they are able to pass on the cost to the end user. But when you think about a fintech is paid based on a take rate, based on the transactions that they are fulfilling. And that take rate, if it's a 1%, 2%, everybody is sharing it. So you can't sit in the middle and say, no, I don't respect the take rate. I want to charge my 100 shillings, 150 shillings. So we've introduced pricing that makes it easy for them to be able to participate, while at the same time still be able to innovate on their financial model. And then we do have other players who we want to attract, who say that, look, my end user is not your typical bank customer. They are less endowed financially, so they want a very low cost. And that's what keeps us awake at night to try and figure out, how do I empower this person to still be able to come to our platforms? So it's been open, it's been transparent, and really innovating on the products to make sure that everybody is welcome. Because at the end of the day, based on the way our market is regulated, the money always ends up in a bank, whether you're a wallet provider, microfinance, SACCO, bank. The only recognized eventual store of value is going to be a bank account. So because of that, we do have very fruitful discussions with everybody. And we're also able to show the banks that this is your stake. Now, everybody, I can assure you, almost 40 banks in Kenya have something about financial inclusion, and it's great until you get to the point of where financial inclusion means please lower your price or lower the barrier so that everybody else can be able to be part of the financial system. But there's more understanding that these are important players, that microfinance banks, SACCOs, and fintechs are important players in the ecosystem. They do solve unique problems, and the banks do benefit from the activity that these other organizations are doing. So there's a space for everyone, even though sometimes they do compete. There are places where they do cooperate for common good. And what we are saying is that a lot of trends are changing. So there was a report recently that said people are now more using agents to withdraw cash than ATMs. I don't know how many ATMs there are in Kenya, but I do know they are close to 400,000 agents. An agent just means somebody you go, you give, you either withdraw using mobile money or you withdraw using your bank card. And the industry is willing to cooperate on that because there is a lot of duplication of what is happening there. And there's an opportunity to simplify things and make it easier. So all the participants, whether you're a bank, whether you're a SACCO, whether you're a fintech, they all want to come around the table to solve these problems. So I think for us, I would say we are in a good space because everyone is slowly coming to the realization that to create a healthy financial system, everybody has a stake and everybody, so to speak, has a seat at the table.
I mean, the seat of the table, I think, is incredibly important. And that's how you can solve these problems. If you listen to them from the very beginning, you'll know that before you implement, this microfinance institution is going to say, I don't have that tech. What are you thinking? So hopefully we can find that out. But I wanted to go in a different direction, but George, you said something that I think everybody resonated with, which is the customers of the SACCOs and MFIs and even the wallets will say, my customers don't want to pay that much.
Yeah.
It's too high of a price. I want all of you very quickly, what is the price that people want to pay for the last mile, the low income communities? What do they want to pay for these services? So George, since you brought it up and giggled with it, what are they asking for? Let's start with you.
Wow, that's a tough one. Yeah, it's a tough one because if you think about it, the person who's sending the money, whether you're paying somebody else or you're making a merchant transaction, they want to pay as little as possible. And the person receiving the funds want to receive their funds without any charges. Now, when you put the people actually in the ecosystem, we try and balance, because what we do tell our participants who take deposits is that if you're a bank, for example, and you're receiving funds, that's a plus, because we know at the end of the day, you need to have a certain net position. And if you don't have that net position, you're going to borrow. In the also called overnight lending market. And it's an expensive market because the guys who have the money don't have to lend to you, don't have the money. It's a seller's market. So it should help them appreciate that even though I may not be able to pay you to receive the funds, the fact that you have the funds strengthens you as a financial institution. Then around the other side of the pair, I do believe those costs are going to get lower and lower and lower in exchange for more and more volumes. And it's tough for everybody. It's tough for mobile money operators. It's tough for microfinance because all these institutions hire, head of digital, and they are expected to make money from digital revenue. And a lot of it is these fees. But the question is, at what point do I get to that I trade off a price to then be able to open up more volumes? Because people are gonna transact more volumes if price is no longer a barrier. And something that is very indicative is, so when we entered the COVID pandemic, the government of Kenya and the Central Bank of Kenya waived fees. That is moving money from a mobile wallet to a bank or a bank to mobile wallet. And at the end of that period, 99% of all transactions were actually mobile in terms of transaction volume, even though the mobile transactions only contributed 44% of the transaction value. So it really validated this thinking that if the price is right, so I really don't think it can be free, because what happened at the end of those 2 years is a lot of people were knocking the door on central bank to remind them that, yes, it's free. We've now managed COVID, but we are really hurting because it costs to put this infrastructure in place. So I think it's getting a balance of where it makes sense for everybody and where the players think about the good of the country and not the good of their own pocket. And it's difficult. These are difficult conversations. And what we have seen is that when the government is involved, the regulator is involved, they become easier. So I do recall, so Kenya is in the middle of implementing the QR code standard. They have adopted, by and large, the MVCO standard. And when this thing started, there were a lot of fights from everybody. But the regulator was in the room and kept reminding the participants of public good first, then market share, revenue, profits, and all that. And that really helped tone down the infighting and get to a place of where everybody was thinking of how do we create a more robust financial system that's going to be good for everybody. Yeah.
Thank you, George. And so Morgan, I'd like to ask you the same question. What do people want to pay? And if you want to get into with George, why that's tough, go ahead. So what do people want to pay?
I think for me, for starters, they want to pay for convenience. I want to attach a value to it. But if they realize that it takes away certain inconveniences and it allows them to transact where they're comfortable to transact, and they maybe don't have to make movements or feel insecure about their transaction. And for the delivery guys as well to say, look, I can offer this and I can have people coming in. That's the first point. Only after you have discussed the convenience, then you can settle down and say, okay, can we hit caps to ensure that for use case A, you can transact from within X to Y amount to the end of the use cases. I say so because, like in our case, we looked at the technical integration and interoperability as the first focus. And it was unique because for the first time in this country, we had MNOs and banks having interchange take place. Previously, it could be the bilateral, the MNO to the other MNO or the MNO to the bank. But for the first time, we had a telco and a bank performing interchange through one system. So just getting to harmonize, we haven't yet fully settled, but the dust has settled and people are now beginning to realize to say, okay, maybe I should have taken a little bit more from this one because I'm acquiring, or from this one because I'm issuing. So from time to time, even when we are reviewing our rules, we go through those stages of trying to see how we still go back and create that balance so that the delivery side is happy and our customers who ultimately expect to get a much cheaper service go back and say, I transacted on a foreign ATM or through a foreign MNO, and the charges were not what I expected, they were actually lower. So maybe for starters, we agree that what we pay for is convenience, and then let's add some values to that convenience as we operate the system.
Excellent point. But first we have to prove to people that it's convenient before they want to pay for it. And we all have that problem. So Aimable, the same question, but let's get a little more focused because we talk about merchant payments a lot. And the question of what does the merchant want to pay? What does the payer want to pay? And what are your choices?
If I was to choose, I would make it free. Because I enjoy paying some funds to someone without charge on me. In Rwanda, merchant payment is free. You can pay to Momo Pay for free, no charge on me. But what merchants are doing to avoid the cost on them, because they have to pay for MNOs 0.5%, they hide the code. You have to send the money direct to their account, so that they charge you for the fund transfer. So it's quite difficult to set the price because people will always prefer free transfer. So whenever you make, even if it's convenient, as my brother said it well, even if you are adding more value, but the even small charges is a burden to the user, to the end user. So whatever we are doing, we need, of course, to minimize the cost of fund transfer to the maximum possible, because the beneficiaries are the hold of funds, which is banks, MNOs. They are actually using my money. If I send it to you, it sits on mobile accounts. They can give it to the bank. They get profit from them. So to me, I would say the regulators need to work hard to make it at minimum possible, not free, but the minimum possible. I'm avoiding to say exact value. Thank you, Steve.
Thanks, Aimable. And Leonard, same question then for you, because you guys are actually live in the market with these products. What do you think? Is free possible? Or how close can we get? How close should we get?
Okay, so in our case, you have the majority that is unbanked, and in the semi-urban or rural areas. So for them, it's a challenge to actually tell them that you have to pay something until you have to explain clearly why they have to pay. For the converted like us in this room, it's very easy, because you would tell them to say, look, for you to travel to agent XYZ or ATM XYZ, it'll cost you this. But I'm telling you to pay maybe 40% of the cost that you incur to travel there, or even 30%, they would understand and they would know that, yes, I have to pay something for the sustainability. So just to agree with my colleagues, it's a really complex discussion, but eventually when we engage the stakeholders and the customers and give them clear reasons of why they have to pay, I think would really get to someone. Thank you.
Okay, thank you very much. I think I could keep talking to you guys all day, literally. There's about 10 questions that came up in my mind while you were talking. However, I want to give it to the audience, and a few people had already asked if they could ask some questions. So anyone have any questions that they would like to ask this panel? James, you had made a request.
Thank you, Steve. Being an engineer, my question is technical rather than business focused. So I apologize to the business focused people in the room. If you had to make a wish list for the next generation of switch technology, could you maybe share with me in the room what you think the top 2 or 3 items on that wish list would be? Thank you. No one in particular. I value the opinion of the entire panel. Thank you.
Excellent question. All right. Go ahead, George.
Okay, so let me start. Wow. I think the first one is, if I had a wish list, is I wish it was very easy to get onto the platform. And by easy, I mean it should take 1 day to read the API documentation, 2 to 3 days to test it on a sandbox, and on the 4th or 5th day, I'm in production. So that would be my wish list. So before I joined PesaLink, I worked for a fintech. And this is actually how we measured our integrations. And if we couldn't do it that fast, it just wasn't up to scratch. There is some acceptance, which I don't agree with, that financial system, bank systems are complex. They are not, they're just systems. Yeah. My second wish list, I guess, is for a platform that's easy to extend. A lot of the systems we use were not born in the cloud era. They used to do ATM switches. They are actually, for lack of better English, they are refactored card switches, refactored EFT switches. So they are architected from a very closed point of view. Closed meaning anything I want to do, you pay. Anything you want to do, you pay. You want a new transaction type, pay. You want to add 2 more columns in database, pay. So we want an open system where I can read the documentation and say, okay, I don't think I have enough transaction information. I want to add a bit more, and it's clear how to do that. It's closed systems are difficult to innovate around. So those would be my 2 wishes.
Can't imagine better for, I think there's about 3 people who are speaking in the next 2 days. We're going to find you afterwards. Awesome answers. Anyone else want to answer that question? This is a great one.
James, how long have you thought of that question? Then I'll ask you to make a list for us that you have in mind. From tech perspective, why are all payment systems difficult to understand? Somehow, starting from core banking system, everyone thinks like it's not common software like existing software. I think in our next generation, payment system should be easy. Easy to use, easy, I don't mean not secure, easy to integrate, not only integrating local players, but interoperable on international scale, because most of the systems, I was talking to my brother here from Malawi, they are using different messaging protocol. That is to mean already integrating with them will be requiring another step for me to implement another layer for me to communicate to him. I'm looking forward to for the next generation to have interoperable systems, like easy to use, easy to integrate on local players, but interoperable on national scale. Thank you.
Thank you, Bob. Leonard, did you want to try to go for that question?
Okay, so I would say, just to agree with him, I've seen that I've observed that there's a huge movement towards web integrations. And one of the areas around web integrations has been security. So if we can make the web applications as secure as they have to be as compared to ISO 8583, that is deemed in most cases difficult. I think we should make headway to lessen the time to market and improve on user experience as well. Thank you.
All right, Morgan.
Okay, I think this discussion starts from the business side, basically. Technology drives the business. So I think it's high time we began to look at maybe our public digital infrastructure and use it for what it should be. Usually we're looking at the bottom line, how much am I going to make and what will be my recovery on my investment and so on. But if we can begin to look at shared platforms for what they should be, we agree right from the onset to say, guys, our profit margins should not exceed X, because look, in Zambia right now, we've got very few local banks. Most of the banks come in from outside, meaning whoever a CEO has already got a target to achieve, not just for this year, but maybe for the next 5 years. So within the 5 years, if you come in and say, we're going to have this common public good, and this is how much it goes into, they'll look at the bottom line and say, okay, I will not go this route. But if we can begin to look at public infrastructure for what it should be with regards to digital financial services, I believe everything else that falls in, because even the technology will come in cheap, the support will come in cheap, the skills development will come in cheap. So how can we have a total package that addresses the whole solution and not just the hardware and the software that is running on that or supporting the system?
Okay, unfortunately, I have to wrap this up. These guys will be here. I think everyone will be here all week. If you have any other questions, I'm sorry, Michael. We are
Still, I wanted James to give us his checklist as well. Just quickly.
unfortunately, fine. I'm not letting you get the floor.
Well, thank you. I'm very happy to hear those answers, because I feel that what we've been trying to achieve with Mojaloop to date addresses a great deal of those dreams and concerns. So I hope that over the next couple of days this week, with the presentations that you'll see, as well as talking to the other delegates around the room who've been in this space for many years now, you'll see that Mojaloop does answer many of these questions for you. I would be very happy to talk in detail to address every one of your points. I've made careful notes of everything you've said. So let's talk in detail and address each one of those points. But I think from what I've heard, it sounds like Mojaloop is the technology for you.
All right, and with that, thank you guys so much. And again, whether or not you use Mojaloop, the point is, these are the challenges we have to address for making the next generation of future payments. There are a lot of options that you can go to do that. But we hope that as a community, we're trying to address how to solve those problems that you've all addressed. But again, you're going to find most of the people in the community, if you're not new to the community, have been thinking about those problems for 4 years. So it's incredibly exciting to actually hear it directly from all of you. And I highly encourage everyone from the community to talk to these gentlemen and hear more about what their challenges are. This panel was as exciting as I was hoping it was going to be. Thank you all so much for taking the time, but unfortunately we're way over time, so we've got to run off the stage. And we'll I'll introduce the next session or introduce Simeon. So Morgan, George, Leonard, Aimable, thank you so much for joining us on stage, and look forward to the entire week with you.